grave disservice to average investors. And likewise, you've criticized mobile apps that make investing easy and fun as, quote, gamification, end quote. But in my view, delivering a product that customers like isn't a bad thing. And I worry that you're attempting to fix problems that don't exist today. Today is the best time ever to be a retail investor in the United States of America. Retail investors receive the best execution. A person of modest means can share in the gains of the stock market at negligible transaction costs. We see the tightest bid-offer spreads ever. At least 4 major developments for retail investors made this all possible. Commission-free trading, accounts with no minimum balances, low or no-fee mutual funds and ETFs, and, yes, user-friendly technology like mobile apps. And investors can even voluntarily use a broker who declines payment for order flow but may therefore charge a commission. Now, despite decades of rapidly growing numbers of retail investors participating in stock market gains and enjoying more product opportunities at lower costs, some of my colleagues suggest that the markets are somehow rigged against retail investors. I'd like to hear how it is rigged. Don't retail investors receive dividends like institutional investors? Aren't retail investors entitled to best execution like institutional investors? Don't the value of retail investors' shares and those of institutional investors both increase when a stock price goes up? In my view, the SEC's job is not to make retail investing more expensive or unpleasant or difficult. In America, adults investing their own money should be free to decide how to do so. Let me turn to cryptocurrency, which together with the blockchain technologies, this is a very, very important and very promising new technology. As you know, cryptocurrencies are actively traded on many platforms. A really important question is whether a cryptocurrency is a security for regulatory purposes under the Howey or some other test. Now, based on your public statements, it's pretty clear that you believe that some are securities, but others are not. So I'm frustrated by the lack of helpful SEC public guidance explaining how you make this distinction. What makes some of them securities while others are not securities? Now, I understand that the SEC staff will privately provide feedback and analysis on whether a cryptocurrency is a security, but why is this analysis private? Why not publicly announce what characteristics make a cryptocurrency a security or not a security? In other words, how do you apply Howey and the Reeves tests to these new products? Why wait to make the SEC's views known only when it swoops in with an enforcement action, in some cases years after the product was launched? This is regulation by enforcement, and it's very objectionable, and I'm concerned it can stifle domestic innovation. So, Mr. Chairman, I hope we'll get a better understanding of your views on these and a number of other issues. There are many things on which you and I agree and where we could work together to protect investors, to ensure fair, orderly, efficient markets, and facilitate capital formation. I hope we can work together on these really important parts of the SEC's mission.
Thank you, Ranking Member Toomey. Today we'll hear Securities and Exchange Commission Chair Gary Gensler, no stranger to this committee. This is Chair Gensler's first appearance here in this role. Chair Gensler, please proceed.
Good morning, Chairman Brown, Ranking Member Toomey, and members of the committee. I'm honored to appear here before you today for the first time, as you said, as Chair of the Securities and Exchange Commission, and I'd like to thank you all for your support in my confirmation this spring. I'd also note, I think, Chairman, you may be the 8th chairman that I've appeared before in this committee. I'm aging myself a little bit, but I think Chair D'Amato might have been the first that I was in this committee room. As is customary, I should note that my views are my own. I'm not speaking on behalf of my fellow commissioners or the staff. The U.S., as Ranking Member Toomey said, the U.S. is blessed with the largest, most sophisticated, and most innovative capital markets in the world. We actually represent 38% of the world's capital market, and that's when we're only about 23% of the world's economy. They're competitive, they're efficient, they're transparent. But I think we can't take our remarkable capital markets for granted. New technologies continue to change the face of finance for investors and businesses, and more retail investors than ever are accessing our markets. Our countries and other countries are also developing deep competitive capital markets as well. And though I provide greater detail in the written testimony, I'd just like to flag 3 areas for now. First is market structure. Market structure is fundamental to our mission, to protect investors, on the other side, facilitate capital formation, and that which is in the middle, fair, orderly, and efficient markets. How do we do that? It's through transparency and competition in those markets. So I've asked staff to take a look at a number of market structures. The Treasury market, that's the base of all other fixed income markets. The non-Treasury fixed income markets, corporate bonds and municipals, which, by the way, in the U.S. are twice to 2.5 times the lending out of banks, are loaned through our capital markets. Our equity markets and securities-based swaps as well. In each of these crucial markets, I think companies and investors alike benefit if we can increase competition, lower costs, and bring more transactions out of the dark. Second is a rapid change in technology. We're living in a transformational time, perhaps as transformational as the internet itself. Now, I expect some members might ask a question or two about crypto, but actually the first thing I just want to mention is artificial intelligence. AI, predictive data analytics, machine learning are shaping and will continue to shape many parts of our economy. And while these developments, I believe, can increase access, increase choice, and lower costs, they also raise new questions about potential conflicts, biases in the data, and yes, even systemic risk. And now for the crypto, because I know that you're all, keenly interested. We just don't have, I believe, enough investor protection in crypto finance, the issuance of these tokens, the trading, and particularly the lending. Frankly, as I've said before, I think it's more like the Wild West. I've asked the SEC staff, working with our fellow regulators, the Commodity Futures Trading Commission, the bank regulators, the Treasury as well, using our current authorities, how can we best bring investor protection to these markets? I stand willing also to work with this committee and other committees of Congress if you take up any legislative initiatives. And then third, issuer disclosure. You see, since the 1930s, we've had a basic bargain. Investors get to decide what risks they take. That's up to investors. But Congress said that it should be based on full and fair disclosure of the issuers. Over the decades, we've updated what those disclosures are, and today's investors are increasingly looking for consistent, comparable, and decision-useful disclosures around climate risk, so-called human capital, cybersecurity, and other areas. So I've asked staff to develop proposals for the Commission to consider these potential disclosures, and yes, put these proposals out to public comment, put rigorous economic analysis against them, and what is it that investors want to see, and have the public comment. Beyond these policy areas, the SEC employees oversee 28,000 registered entities, more than 3,700 broker-dealers, 24 national security exchanges. You've got the picture. A lot going on in our capital markets, $110 trillion capital markets. Last month, we authorized voluntary return to work, but we've been largely remote for 18 months now. This speaks to the dedication of the SEC staff. I cannot compliment them enough. And while capital markets have grown, the SEC has not grown to meet the needs of the 2020s, though. Over 5 years ago, we were about 4 or 5% bigger, and so I just think that it'd be helpful to be a little bit wise and add to our staff. I hope that you can agree with me on that. Thank you. I look forward to your questions.